not affected to the fund flow statement, but we will post this entry into the respected account. So general reserve account is debit. On the debit side, to equity share capital 1,50,000, and in the capital account by general reserve account 1,50,000 rupees. So this is an entry for the amount of changes made in the particular part of capital. Now the very much important thing is the second adjustment. The second adjustment is company issued rights shares in the ratio of 5:1. That means if company shareholders have a 5 shares, they will get 1 right shares. Alright, and that 1 right shares after issuing a bonus shares on increased capital. So now the second adjustment is a right shares, and that right shares proportion is 5:1, and the capital amount, earlier the capital amount is consider that 3 lakh rupees, then the 1,50,000 rupees, it's a bonus amount, so that the total amount of capital at present, which was actually mentioned in the capital, is 4,50,000 rupees. This is total amount of capital. So here the capital amount is 450, that on the basis of the adjustment is increased capital. So increased capital after the bonus shares issue is 4,50,000. Now this proportion would be applied on this. If you have a 5 shares, you will get 1 right shares. Then 4,50,000 rupees of capital, how much right shares would be offered? And that is 90,000. Amount of right shares offered is 90,000. So now the 90,000 rupees of the right shares is offered on the basis of the bank only. So now what would be the general entry? General entry is cash comes in or bank account debit to equity share capital account. Bank account debit to equity share capital account. Now on the basis of this particular journal entry posted into the equity share capital account by bank, right shares 90,000 rupees, and this entry would be given here in the fund flow statement. So now this entry would affect it to the fund flow statement and comes as a sources of the respected item, and the respected item is the amount of equity share capital issued in a right shares. So the 90,000 rupees would be recorded under the category of this. So which is already recorded here. We make a star over here, so at least you can remember at the time of when you are preparing a final fund flow statement, this entry would be coming in the fund flow statement. So this was a second adjustment. Now coming to the next adjustment is income tax paid rupees 37,000 for the year ending 31st March 2006, and also paid proposed dividend for the year 2005-06. So provision for taxation is 37,000 rupees paid. What would be the general entry when you paid tax? You already have a provision for taxation. So when you have a provision for taxation and you paid certain amount of tax, the general entry is provision for taxation account debited to bank account. So posting provision for taxation account debit to bank, so that to bank account here 37,000 rupees. Make a star here. Why make a star? Because of this entry would goes into a fund flow statement. It's an application of fund goes out. So when you paid certain amount of tax during the year, it's recorded in debit side of the PFT account. So 37,000 rupees would be recorded here for the payment of this particular tax, and along with that also paid proposed dividend for the year 2005-06. So we have a proposed dividend in the particular balance sheet, and they mention the proposed dividend paid for the 2005-06. That means that last year proposed dividend is paid. If the last year proposed dividend is paid, it would be recorded in the fund flow statement. The current year proposed dividend will be recorded in adjusted profit and loss account. If it is not given in the adjustment also, it works in that way only. So it will not be changed whether it is mentioned in adjustments or not. So this is your third adjustment. Moving to the next adjustment, that is adjustment number 4. The adjustment number 4 is investment is sold rupees 7,000. That means 7,000 rupees of investment sold with profit and profit is transferred to capital reserve account. That means we need to identify that how much amount of profit they were sold out, because of the cost price of the investment is rupees 7,000. So the 7,000 rupees of investment sold and the profit is transferred to capital reserve account. I'll just remove this working here from here, because of I need to prepare one more account as per this requirement, and that is capital reserve. So here capital reserve account is prepared. All of you just observe your capital reserve account from the balance sheet, and that balance sheet capital reserve account is showing the balance. Yes, the capital reserve account balance is showing 2,000 and 5,000 rupees. So the 2,000 rupees is an opening balance, and the closing balance is 5,000 rupees. And it is clearly mentioned in the adjustment that the amount of profit is received from the selling of investment is transferred to capital reserve account. So first let's close the capital reserve account. So we are going to do a work back method. This is something a reverse method. From this method we will identify how much amount of profit is earned from this. So how much difference is there? That difference is considered as a profit, and that profit we will transfer into the investments account. So when you close this account, the difference of rupees 3,000 would be here, and that we assume that is actually comes from the investment account. So here this is a profit, and this profit is transferred to investment account debit side. So here it is credit, in investment account is debit to capital reserve, into bracket profit 3,000 rupees. Now see here, your value of investment is 7,000. 3,000 rupees is profit. That means your sales price of investment is comes to 10,000 rupees. So that is by bank into bracket sale 10,000 rupees. So investment sale is rupees 10,000, right? This is what all about the adjustment number 4. But we make a star over here because of this would be recorded in fund flow statements. It is a sources of fund, because of ultimately we realize the value of realization of value from the selling of investments. Now moving to the next adjustment, that is real value of machinery is 20,000 and accumulated depreciation is 7,500 on machinery, which is sold at 15,000. This is also one type of very simple adjustments, but let's see how it would be considered. Because of the machinery value is 20,000, accumulated depreciation is 7,500. So if you are going to see this, that the amount of depreciation is 7,500 and the realization value is 15,000. So ultimately you will raise a profit out of it. Now see here, I'm just going to do the working on this. It's not required, but let's see. Your machinery's cost price is rupees 20,000 less accumulated depreciation on it, it's 7,500. So after depreciation your value is 12,500. After depreciated value it is 12,500, and the selling price of this machinery comes to 15,000. So difference between these two, your depreciated value is lower than the selling price. That means the sales price is higher. It means that the 2,500 rupees you received a profit. 2,500 rupees, it is your profit. Now what would be the journal entry in case of this transaction? The journal entry is very simple. The amount of realization, bank account debited 15,000, depreciation account or into bracket P&L account debit 7,500, or the depreciation fund account is already prepared. So depreciation fund account debit 7,500 to P&L account 2,500 to machinery account 20,000. Because of the machinery is actually given 20,000 book value, so that machinery amount would be considered that 20,000. So now all about this, we'll make an entry by, first is by bank sale, and your sales price is 15,000. Then by depreciation fund account, We will not transfer into P&L account because we already have a depreciation fund. If you have a depreciation fund, then any amount of depreciation cannot be transferred into the P&L account, and that's why we were transferring here, and that is 7,500. Your book value of the machinery is 20,000. And the total of this is 22,500. As I already mentioned and calculated here, 2,500 rupees is profit. So that 2,500 rupees profit is transferred to P&L account. We did not have any clarification to transfer this profit. So we transfer this profit into P&L account, 2,500 rupees. And the depreciation is transferred here to fixed assets account, into bracket machinery, 7,500 rupees. Alright, and make a star over here. This entry, another entry would be recorded in the fund flow statements at the time of when you are recording as a part of sources. You will realize 15,000 rupees out of sale of machinery. And not only that, here also we are allowed to make a star because of you earn a profit out of the sale of machinery. This is also recording in the adjusted P&L account at the time of the profit is consideration. So this is an adjustment number 5. So after all the necessary adjustments entries are given to the respective accounts, we'll move for the next part, that is the part of adjusted P&L account. So adjusted profit and loss account is preparing to identify the adjusted profit after changing of non-cash items or the entries which are provided the provisions which affected twice in your funds and the entries which are affected twice to the fund. So one entry must be reversed, as we already discussed in the theory as well as in the previous question. Here from this adjusted profit and loss account, we need to identify first opening and closing balance. So see please your balance sheet, and the opening balance is given 30,000 and the closing balance is given 45,000 rupees. So by balance brought down is 30,000 and to balance carry forward is 45,000 rupees. Now after the balances, first we will identify the entries from this particular account. If this ledger accounts have any transactions regarding this adjusted P&L account, we would be given first. Let's see the first from equity share capital. One by one we will close the accounts also. Here the equity share capital account, debit 540, credit 540. So this is square off. General reserve, this side is 3,90,000 and this side is 3,80,000. That means the shortage amount is here 10,000 rupees. And if the shortage on the credit side, it means it's a provision. So provision is always made from the adjusted P&L account. I want to tell you here, there are 3 types of entries which would be considered under the adjusted P&L account. One is non-cash item, second is provision, and the third is the entry which are affected twice. Here the provision is also ultimately non-cash item. It is internal arrangement only, the transfer from one account to another account, but the fund is never moves from one transaction to another transaction or moving from one source to another source. So it is not like that. So here this is a non-cash item. It is just in internal adjustments which would not be affected to the fund, and that's why added back to the profit. So to general reserve provision 10,000 rupees. Adjusted P&L account. Now closing to the next account, provision for income tax. Provision for income tax last is 7,512 for 1,02,000 rupees total. So balance is here 62,000 rupees. Again this is a provision, and provision is a non-cash item. So by adjusted P&L account, again added back to the profit, provision for income tax 62,000 rupees. This is the second item which is actually provided. Next is investments. Close investments account, here 158 and this is 170. So 170 is higher, that means credit side is higher. The difference comes here on the debit side by 12,000 rupees, and that is considered to bank, into bracket purchase. difference amount of the investments account debit side by 12,000 rupees, and that we consider as a purchase. We make a star over there for our identification. This would recorded another entry in the fund flow statement as an application of fund because of purchase investment during the year is considered as an investments. Let's move to the next account, that is fixed assets account, and try to close this account. From the first impression, we would find out the credit side is higher, so we would make a total on the credit side, and that total is around 9,24,500 if I am not wrong. Just confirm. 9,24,500 total is on the credit side, it's right. And here on the debit side, it is 8,17,000. That means the difference is here on the debit side. There is some missing items. We will identify what actually we have a missing amount over there, and that is 1,07,000 rupees to bank into bracket purchase. That means the company purchased fixed assets during the year of rupees almost 1,07,000 rupees. 1,07,000 rupees purchased during the year. We'll make a star over here. This is also considered as a part of application of fund. So when we prepare the fund flow statement, this would be recorded as an application of fund because of the purchase during the year. Preliminary expenses, which was actually already given in this question, that they were start to write off by the year 2006-07. So it will be affected by the year 2007-08. Right now it's 9,000 rupees. They incurred an expense 9,000. So closing balance is 9,000, and it will be write off in the 9 years. So it would be affected by the next year onwards. Depreciation fund, it's a last account. Close the depreciation fund. It shows its first impact. It shows the debit balance is higher. So 1,26,500 rupees on the debit side. Okay, and we will find out the balance, and that balance is around 36,500. That is again a provision. So by adjusted P&L account, provision for depreciation is going to record here 36,000 rupees depreciation fund. So see here, we find out, one by one we close accounts all and find out the differences which are related to adjusted profit and loss account. As I mentioned, any provision, any non-cash items which would be added back into the profit because of it's never affected to the fund, because of it they are not a cash items. So now it's almost considered these three items which are affected to the fund flow statements because it is a non-cash items. Now we will identify another few items. The first is we were paid redemption premium. I already told you, make a star over here when I did working. At that point of time I told you that 2,000 rupees, they paid 2,000 rupees redemption premium at the time of redemption of debenture. That is a loss, and loss due to redemption of debenture. It's loss, and it's considered as a part of the debit item recorded in adjusted profit and loss account. The another item is the amount of 2,500 rupees profit. We already make a star over here, and that amount would be recorded because of it's affected twice. The profit is already included here in your sale item, and that is already recorded as a sources. So one is already affected to sources, the another effect is affected to your profit. That should not be done. So any one effect should be reversed, and that's why we are actually going to do the reverse effect of your profitability and deducted from your balance. So profit on sale of machinery, and that 2,500 rupees would be credited here. So here this item would be recorded on the credit side. Now all of you, if you are going to observe this, all accounts and adjustments entries are already affected to the adjusted profit and loss account. Now we will find out the informations which are from the balance sheet. See the balance sheet one by one. Liability side, equity share capital won't consider here. Preference is also not considered. Capital reserve also not considered. General reserve not to be considered. P&L account is already recorded here. Debenture, the debentures loss is already, redemption premium is already considered here. Proposed dividend. Last year proposed dividend is always paid, so that would be recorded in fund flow statement. But current year proposed dividend, it is proposed, that's why it's recorded here. Proposed dividend of rupees 64,800. So proposed dividend 64,800 will be recorded as a provision for dividend. Next is provision for taxation is done. Depreciation fund is already recorded. Creditors, outstanding expense, bills payable are already recorded in working capital statement. Now